The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. A very sudden sell-off this morning at about, what was that? That was at exactly 9:40. Sorry, I'm a little out of breath. Had to get something done real quickly in between the commercial break after the news and to the show right now. Should be fitter than this. All right, so there's a peak D in the 5-minute chart, peak F in the 10-minute chart, and sudden swoon to the downside. One of the things I've been talking about for a couple of days now is that I've been getting signals to suggest that there are some areas that have been absolutely fabulous that look a little vulnerable. And one of them is Robinhood. Even though the Bitcoin is doing very well, it's gone from 113.44 just 3 days ago to a low today of 98.70, and here it is at 101.38. It's a potential peak F. I'm just looking at this. The weekly chart's fantastic. Even the daily chart's very good. But I'm just a little cautious. So you look at GE. GE is the other one. Down today, down 6 at 256.73. All-time high, 272.80, just 4 sessions ago. So this is something to actually, I say it in this particular way, but look at the way it went up. It just took out the low of the 14th to 56.00, round number low. And it goes 1, 2, 3 days, spirals up to an all-time high. And here it is 1, 2, 3 days from that, and it just took that out. But it's only a peak C, a leg C in the week, potential peak C in the weekly chart. All the technicals are strong. The technicals are not that strong in the daily chart. Let's look at Microsoft. I'm just looking at it. We actually own all three of these. But Microsoft pulling back a little bit, down $1.50 at 508.37. All-time high 3 days ago at 514.64. So I'm just looking at it. We came within a penny of doing something this morning. And so far, done nothing. I said, just subscribers, we're not doing anything the last 2 days. We're just kind of waiting. And we're waiting because I'm getting signs of some kind of technical toppy action within the Chapman wave methodology. But unless we get bad news that the market takes as bad news, you really don't get sell-offs that are sustained. You get a one-off pullback and the market bounces back. So you've got to be really careful about getting aggressive about shorting, even though emotionally you might say, oh, this market's way too toppy. But look at this. All of a sudden you've got Toll Brothers up very sharply, up 6.5 at 123. 122 round number high 2 weeks ago, pulls back quite sharply from the 123s, 122 round number, pulls back, goes to 113, and today it's gone to, could that have been 122? Did I make a mistake? I think I did. 123 points. Oh, 121 round number low. I don't know how I got that. It was 123.71, and today's high is 123.38. Look, you got RHI, right? RHI. Oh, did I do that? Not Robert Half, or DHI, DH Horton. Big spike up, 16 points to 147, way above the 200-period moving average, leg D in the weekly chart, but it once hit 200, just about 200, and then plummets down to the 115-ish area. 200-period moving average held as support in the weekly chart, and it's bouncing back. But is this just a bounce, or is this something more serious? If it's something more serious, in other words, serious on the upside, that's going to be very, very important. All right, don't want to get too carried away here. Let's just do the numbers. Dow is down from its intraday high of 44,463. It's at 44,367. 367, yeah, about 100 points off that high, but holding okay with a 9-period moving average. But just so this is what you can see. I'll just quickly go over to the chart. I show my subscribers every day. This is a Chapman Wave inside track repellent zone. Look at that. It hasn't been able to break above it, even though the 9-period moving average is way above the 14. The MACD's weak, the stochastic's weak, the on-balance volume is very weak. That 9-period moving average is just holding that chart up. How long it can do that for? Can it do that long enough for the technicals to start to improve? Or, well, which one is going to go? The way it looks right now at a peak D in the 120-minute chart, I'm thinking that we're starting to see some of the action that suggests on a purely technical basis, we have certainly seen the 44,855 high of the 3rd of July, with a little double top, peak C1, C2, could even call this a C3. You're looking at a lot of resistance, but nothing's breaking down. So the S&P, all-time high yesterday. You go from an all-time high. I've got this as a G. To call this an alternate count, something else has to happen. This is very unusual for me to have the choice of 3 different wave counts. But the most important aspect is that the 9-period moving, the price in the S&P and the daily chart is still above the green 9-period moving average and that's 62.74. That's the support. It's only about another 13 points down, and then we take it, and then we hit it. And the 14 is way over the green, and that's at 62.50. So those are your near-term support levels. To get this green line to go negative, you'd have to go under the low that was made on the 16th, which is at 62.01.59. No, 6201.59. You probably have to go under 60, quite nicely under 6,200, and then you get the green line. But so far it hasn't. So all I can say is that this is a work in progress. It's suggesting that within the context of these highs that have been made in certain areas. Let's see, Google comes out with earnings. I think it's today. Google. Trading at a nice recovery high, leg C under the 297.08 February high, and that went down to 143, 142. So it's come back quite nicely, but it's in leg D already. So this has to be pretty perfect earnings and outlook that you're getting in Google to be able to say that 297 is going to be a target in July, August. Otherwise, you might see a stalling motion like you see in the weekly chart as it pertains to a rally from a low going straight down. It's actually a single leg A, and then it's had a bumpy ride up, a stair-step way above the 9-period moving average. All the technicals are pretty good. So we'll have to see what happens, because going above 195 this week, we're only in Tuesday, would be very positive. Slipping under 185, let's make it 183, the 14-period moving average in the daily chart would be negative. QQQ. The QQQ right now is at 560.37. This is a leg D, maybe a peak D today. And, well, we'll see what happens. It's down 388. At 560.33. Not a big deal. It's just not a big deal. It's on the 9-period moving average, which is way above the 14. But the MACD has turned down. The relative strength has turned down. The stochastic still good at 86%. I'll be back in a moment. Dow's up 23. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yeah, so the QQ is a leg D, probably a peak D today with a high yesterday of 566.06, and just change that 566.06. 66.06, and today is trading at 560. Not a big deal, but it is a pullback with the 9-period moving average still very strong. Let's go to the IWM, the Russell 2000. IWM is the Russell 2000 small caps. It's in this rectangle formation, kind of struggling a little bit, but nothing really bad in terms of the 914. But the MACD is turned down quite sharply. The relative strength, the gray line right here, is down. The stochastic is at 67%, and the on-balance volume is pullback. The weekly chart is still holding beautifully with the stochastic at 93. I will not fight that. That's the bigger picture, and that's very positive. I do want to go to the XLK. I haven't looked at it for a couple of days. I was asked about it, and I forgot to update. Gosh, I haven't looked at it for a while. Leg B in the weekly chart, very strong. A brand new leg, I call it an A for now, in the monthly chart. Let's just see. So that was a peak E, and I'll do this very quickly. Look, this is, identify the lowest low bar. And I had a question, actually more a statement. It's a statement, it's a legitimate statement, and I'll get to it in a moment. In Tiger YouTube, A, B, C, D, and then a brand new A, right there, A, B, C, D, E. Could even be an instant restart, although I don't think it's going to be. So within that context, 1, 2, 3, that's not an instant restart right there. So that's a down arrow, that's an up arrow. And this is the reason, on a purely technical basis, very often over the decades, I'm talking about, I shouldn't say very often, over the decades, what we've found every once in a while is that the Chapman wave notation gives some kind of a sell signal, but it isn't reflected yet in the bad news. But within days, suddenly the bad news filters in and the market starts to turn down. Therefore, I very often, over the years, have used either the Dow. I should have used the Dow before, but I didn't. Use the Dow for a sell signal because, look, the Dow has made this peak C1, C2 top, and it's already 3 weeks that it hasn't broken to a new high, but I haven't used that as a short. I might do that if I get signals by the end of the day. And I wouldn't get too aggressive about the short, maybe 2 times short in a small position. But when I'm looking at the different sectors, I have to rely on the SMHs as really how the clue is they move. They are very often the indicator that signals that the overall market is showing strength or weakness. And in this case, it went to an all-time high yesterday of 293.53. 293, let me give you the exact figure, 293.53, which is 10 points, a little less than 10 points above the all-time high that was made back in last year in June. And so it's over a year later. It's already been down to the 170 area and come all the way back. And this is, again, hinting between Robinhood, General Electric, Microsoft is kind of there a little bit. And I'm just saying, I'm watching this closely because this is this is taken out 1, 2, 3, 4, 5 sessions worth of upside action at almost all-time highs or at all-time highs. So I'm just watching it very closely. This is the SMHs. So the question is, Basil, as someone new to technical analysis, seems it would be much easier to simply buy the dips until the charts close under the moving averages versus going by a letter count to short the market. So that's a perfect legitimate statement, but I think people who know my work know that there are times where we start positions and we might take tiny losses, 1 or 2% losses, and then when it kicks in, the third time, usually it's the third time, you more than make it up. But I'm not being that aggressive at this particular point because there is so much positive in the overall market. Look, even Bitcoin. Look, here's Bitcoin. Bitcoin is right now, it's up at 1805. It's really stuck in a range. I identify this as a Chapman wave peak D, and that I anticipated that there should be a sideways move. But look, the 9 is way over the 14. The MACD is still good. So the Stochastic's weak at 69. The on-balance volume's weak. Relative strength is a little bit weaker than it was at that 123,615 all-time high, around about the, 11th or so? 14th. I may as well put the date in, right? 14. And it's not yet a sell signal. It's just a signal to say you've made a peak D. And that's the beauty of this. Look, that's a peak D and was a warning that you could be slowing down. Well, we haven't made a new high yet. So that's the beauty of this. So I use it together with other things. But basically, there are, even today, as you know, I said that we're going to go short only if a certain level is hit. And that was in the S&P, and so far that just missed being hit, and the S&P is holding okay. Not great, but it's holding okay, and it's almost at all-time highs, right? So I do it in a very methodical way, and we'll see what happens. All right, now, question about TGB. So I didn't do the, let me just first do this. This is HG. This is the, right there. High-grade copper. High-grade copper at this point did quite nicely yesterday, but just kind of rallying. And today it's up a little bit, 0.03 at 5.669. Look, it's holding very well. In this rectangle formation, to get a cup pattern that says you're going to go back to the previous high, this is the move today. Should have been nicely above this candle, the candle of the 9th of July, which is 573. It isn't, but it's still holding. Look, above the 9, the 9's rising with the black 14-period moving average. The MACD is good. The relative strength is a little bit weaker than it was a week ago, but it's still doing well. Stochastic's weak at 66%. On-balance volume is good. And look at that monthly chart. It suggests very strongly that there will be a new all-time high. I shouldn't say all-time high. A new multi-year high above the 5 5.8955 level by going to 5.8956. But it hasn't really garnered this strength. So if it can get to 580 without taking out today's low of 5.5750, that'll be very good. So now we can look at TGB, which is Taseko Mines, in the this is in the copper area. It's trading up 7 cents at 3.31. And this pattern from that peak G that was made at 368 was actually, did I go? No, it didn't go higher. Why did I put that in? Let me just check this out. So the high on the 8th of July was 368, and then it went to 367. Oh, that was a mistake. That's a peak F right now, and it's stalling. So this is a peak C, same as high-grade copper in the weekly chart, but it needs more oomph to the upside. The 9-period moving average has pulled back, but it's still green, but it looks like it wants to turn down. So I'm just watching it very close. We are long from 3. It's gone to 368. We took some off, a very nice percentage gain, obviously. But this is... Wow. Give me a second, because I need to just put it together with some other, the copper stocks, and so I can get a better picture, because this is just a very low-priced one. I want to look at SCCO. Yeah, look at that pullback. All right, I'll be back in a moment. Basil Chapman, Dow's up 25, S&P's down 17.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kickstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hello, so we're looking at the copper. So copper has made a daily peak E, and now it's just kind of, it's in a gray leg B to the upside in this rectangle formation, a very narrow rectangle at first. And I need to see it really take out this high right here. Okay, why is it not grabbing? Okay, they are grabbing it and sliding it across. There you go. Okay, so now it's gotten almost to the level of 5.7190 today, which is 5738305. Yeah, it's getting close. It needs to clear. It really needs to. You want to see copper in the 5.77 area, and it's not there yet. It's a peak C in the daily, in the weekly chart. Now, when we go to FCX, which Freeport McMoran, that made a peak D at that same level. Now, it's interesting. I can't put a down arrow because although the price is closed underneath, it's been underneath the black 14-period moving average for 4 bars, it's still green. So it's kind of holding okay. And I've got a leg C, a peak C in the weekly chart. And if we go to the SCCO, which is Southern Copper, it's almost the same thing. It made a peak C. There's no other way I can count it. And the high that was made back in July the 3rd, July the 8th, at 109.40. So I have slightly different 109.40. I have different wave counts. This one says that it's still active and that it should, if that's the low right there, it's not even close. So this could still have an inside ABCD below that 109 level, but it is holding okay. It's not great. It's not breaking down. It's not great. So let's go back to TGB, and all I can say is we're long. We've taken little bits off for money management, very nice gains percentage-wise, but it was a little deeper. This move right here was a little deeper than I would have liked to have seen. The candle is too much. It's very strong to the downside. 351 high, 326 low. Close near the low of 329 on the 16th. And you can see Freeport McMoran had also a very ugly day there. But it's come back above that. And SCCO, there are the copper stocks, but these are the ones I'm looking at, also had a bit of a dive there. So I need to see some. Holding okay is fine. And the question is, will TGB go above 368? My answer is yes, I believe it will, except that my timing would have been that it would have been by the end of July, and now I can't say that because if it slides under 318, it's going to take longer. The weekly chart is still fabulous. But price is price. So I'm just saying the 200-period moving average is way down, and that's still rising. That's a good sign in both the daily and the weekly. But I do want to look at what the price is for the green 9-period moving average, 305. A close, well, obviously a close below 3 takes us out because we've raised the stop slightly to be able to take no loss at all unless there's a gap down. But at this particular point, I like what I see. I'm just a little disappointed in that one candle that just pushed it a tad low. If it was all of this was above the 14-period moving average, I'd have absolutely no qualms in saying by, what's the date? Today's the 22nd, and the end of the month, do we have a day on the end of the month? Yes, we do. It's a Thursday, the 31st. So it's a week from Thursday. A week from Thursday, I would suggest that if it's over 358, that's not very far away, but over 358 says it's working its way towards a leg D, and that should come end of July, beginning of August. But that all is dependent on $3.15 to $3 holding in TGB. I like what I'm seeing right now. I hope that helps you. Next question is, okay. Now, the question that I think, so let me just go back to the Tiger YouTube So I use the Chapman wave methodology in the wave count. But I'm also using many other things. And one of the things I'm also going to use, I haven't used it yet because I've said that it's a non-entity at this particular time, is the VIX index. The VIX index is up 35 cents at 17. I do not like these single-day spikes that give it up. So what I'm going to say is, to really get a concerted effort, you have to have bad news. We haven't got the bad news filtering through the market now. I've only got this Chapman wave count, and so far I've got parameters that have to be met before we start any other position on the short side. Just missed it today. That's fine, because I wanted it. The proof of the pudding would have been if that number was hit, and it could still be hit today, then the S&P should start to pull back a little bit more, and then we have to wait for the bad news. But it's the VIX index. If this market starts to really turn down, I don't want to see the VIX suddenly spike to 19.46, the 200-period moving average, in a day or even 2 days. I want to see it deny as the market pulls back, and then recognize. That's the way you're going to get a concerted effort of bad news filtering into the market and really affecting the effect of the bad news. And so far we haven't quite got that at all. Not sustainable. There was that momentary thing back in earlier June where we were going up into the 22 area, and that was a little bit tariff, and then there was the news about Powell. But these are transitory. I need something sustainable, and we haven't got that for bad news. Okay. With that said, next question came in. Let me go. Okay, so I wanted to do these. I had a question about IoT. I'm sorry I took so long about it. Jason, I know that you're over there in London, so you'll be listening to the recording. I didn't do it yesterday. I only saw the email late, which is fine, because it was pulling back, and let me just check here on the 120-minute show. I might have said nibble, but I don't think so, because I followed this for years. This is Samsara Inc., IoT, for fleet management, AI-based video safety monitoring, asset tracking, industrial monitoring. Yeah, that's right. So in my show, it would have been pulling back, and I would have said, you have to wait for the end of the day. This is right in the sexy area, the area that you say, they're all going to need this. But, the chart is saying, really? And if you look at HACK, which is the cybersecurity ETF, that's been on a tear. Look at this. All-time high just 3 weeks ago in the 88 area. Now it's pulled back, and it's starting to rally back again. Peak A, B, C. There's your D. The 1D had a pullback right there back in early June. Then another peak D early July. And now we're coming back, and it's only a peak B in the weekly chart. Positive, very positive weekly chart, positive monthly. But the daily chart says, unless you can get into the 88 area to really start another peak A, B, C, D, it might just stall here. So this is the whole stalling action that we're looking at. So let me go back to IoT, and I'm just going to say, I'm going to hold off. I would prefer to buy strength, and right now you're looking at weakness. So I'm just saying 38.02 IoT, trading down 14 cents. Let's hold off. Let's do nothing for the moment. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so let me just do this because I wanted to check on it. Thank you, Pat, in the den, in the Tiger YouTube. Yeah, SLDB that we were speaking about yesterday was brought to my attention. Solid Biosciences Inc., neuromuscular and cardiac, having a peak C. And what I'd said is everything about this peak right here looks very much like it should be a D, but it's a peak C and it's pulled back 6.5%, down 43 cents at 5.94. But thank you for telling me what it was. I just didn't see that until after the show was finished. Yeah, neuromuscular, cardiac. This is really improving a lot. Looks good. Keep it on your list as something to monitor. Solid Biosciences, SLDB. Second thing I want you to do is thank you, G in the Tiger YouTube, for mentioning this. I noticed this some time ago, but because it was like an IPO, I kind of forgot about it completely. I didn't want to do anything. So this made a low. This is a Sprott Copper ETF. Makes a low back somewhere around April. And the monthly chart we don't have to look at because that's like an IPO. I have to use the copper chart itself. But this has a peak D, just above the 200-period moving average in the weekly chart. COPP is a symbol, 23.54, up 24 cents now. But look, it pulled back. I do have to put a down arrow here because of the number of bars that were under the 14-period moving average. That could change, but right now, the 9-period moving average did not cross negative, and it's got these 2 bars, and it's looking quite good. So that's why I'm saying that the bias right now for me, based on the 914, is that there's still upside momentum for the copper. Just wanted to clarify that. Next thing I want to do is, someone mentioned KSS. Whoa. This is Coles. Had a spike today. Yes, tootling around the 50, what was that yesterday? 10.40s. And then suddenly today, it doubles. It goes to 21.39 as a high. And it's trading at 13.72. Still up 3.30. I don't know, maybe it's a takeover or something like that. But I just... be careful here. I mean, you have no idea what's going on. At least I don't have any idea what's going on. So I just want to mention that. Then one that I followed, not for years, but for decades. I'm trying to think of his name. I had a Greek last name. TMO. This is Thermo Fisher Scientific. The guy from when it started way back. I used to pass it on Route 128. Thermo Fisher Dynamics. It was Thermo Thermo then became Thermo Fisher, then it became Thermo Fisher Scientific. And every takeover was just brilliant. In December of 2021 at 672.34, it makes a high, plummets to 415.60 in October 2023, rallies and then does not make that high. It fails, and it goes to the somewhere around the 635 area, and then it's come down, and it makes an even lower low just the other day in the 380s. It's trying to rally peak A, B, C, D. It's just made a peak D. But this is one that I followed for years, decades, and they did everything right. But since 2021, they haven't been doing things as right as they used to. So this is like STZ. This is Constellation Brands. Constellation, they do liquor and the cannabis. So I used to say, wow, this is an incredible company. They did everything right. They were the benchmark for anything in the liquor business, and then they make their high back in about 230 area back in 2018. And then I read that they had taken over, or at least one of the cannabis companies. I said, a new learning experience, watch out. And this thing went from the 230s down to the 110 or so area. And then they started coming right, and it went to peak ABCD, then another ABC, AB, C, and then finally a D with a round number. But then the next month it went to 247.75 at the peak D, and now it's gone from 247.75 all the way down to this 160 area. It's actually trading right now at 172. They just, I think from the chart says, they're beginning to get things back again, but it's going to be quite a while. There's the dreaded H pattern. It's making an H to an H to an M, lowercase m pattern. So yeah, so these things that were just brilliant, they did everything right. They've been something wrong for a little while now. Great companies that I used to follow in great detail. So that's that. PDYN. So PDYN mentioned in the den. It says Basil, like drones and robots? Question mark. Like AI? Question mark. How about drone and robots and AI in one? Question mark. Please take a look at my latest potential find, PDYN, and this is A to B in the Tiger's Den, who always finds these things, whether it's biotech or these little tiny baby stocks, and they very often you wait, and then whoosh. They take off like a drone, like a not just a drone, but like AIR, like an AIR, which is AIR. Remember, all-time high on AIR, core repair and engineering to aviation, government, etc. at 85.26. Now pulling back. So let's get back to PDYN. Yes, I do. I think this is very interesting. The chart says if you're in at the right time, that's very good. On the way up. Look at this one. Let's just go to the latest Chapman wave buy signal to buy mode. From there, choose the lowest low, and it goes peak A right there, A. And if your eyes are good, you can tell right away whether it's a peak or not. C, D, and it's just gone very quickly to an E, and then E is a 13 right there. 13. Round number 13. These round numbers, amazing. R in high. And then it pulls back quite sharply to today's low. Today's low is 9.96, and it's trading right now at 10.27. Yeah, I would keep this on the list just to say these cup formations, as long as you're making higher highs and higher lows, and you've had a sharp pullback, they tend to go back to the previous high. And the rule of thumb is they go just under, right on, or just above the previous high. And then if they come back and take out half of the rectangle after the cup formation is complete, in this case, it would be somewhere around 940. If they go under 940, be careful because they could visit the low. So the high that was made, right, peak A, B, C, D, I believe that's a D, week of the 3rd of January at 14.95, that would be a target, but this is one where time would have been on your side, 95 I think it was, peak A, right there, A, B, and a C. So time is not going to be on your side. If this takes, for the next week or two, it's stuck between 1180 and 950. If it doesn't get out of that range, then it's just stuck. If by Friday, out of the blue, anytime between now and Friday, if it trades even for 60 minutes above 1152, there's a real good chance it would get to the body of this candle high of yesterday, which was the opening price of, if I can see it before the bell goes, 1218. So if it can get to 1150 and hold there for about 60 minutes, there's a good chance it'll hit the 1215 area. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let me just do this. So GDX is trading up $1.21 at 54.23. In leg D, if it makes this peak D underneath the 54.70 high that was made back in earlier in June, and then it's going to stall a little bit. Right now, this is showing strength. And the reason why we've kept our physical gold, PHYS, is because gold, I don't know why it is, but it's holding really well. Silver is trading at 39.44, up 11 cents, and it has made that leg D we were waiting for. You see, this is it for work hard, play hard in the Tiger YouTube. That's why we use chart wave notation. Look, there's your D. That's what we were waiting for. Now we've got it in the daily, but the weekly chart is still only C. There's no other way I can count this. It's a peak leg C, and the monthly chart is leg E. So I'm not sure what the market's telling us by having this overall strength in the gold and silver area. It's remarkable. Now, what happened, look at this. U had a spectacular move recently. It went from the sixes. We just missed getting it, or I didn't just miss it. I missed it because I had it as a buy, but I wanted to pull back, and then it just gapped up and kept going. So it's had a spectacular move, pulled back quite sharply today. And UEC, which is the one we almost always have at any time of the year, didn't have it this time for the big move up, trading at 796, down 4 cents, made it peak D. So this rotation through the different sectors has just been absolutely fascinating. It's as if each one wants its own turn. The one that's failed so far in the commodities is the copper. Is the crude oil. Crude oil has just been stuck. Is crude oil going to get going? It looked like it was trying to. It went to a peak D. It arched over. There's a rising trend line. This is both Chapman inverted falling axe and an H pattern, but it hasn't broken down. It will if it goes under 63. Right now it's at 64.97. So with that said, I'll be back with Tommy later on. So far, we didn't add anything today. I'm waiting to see if the S&P pulls back, and then we might start a position there. We'll see. In the meantime, back at the ranch. Have a great day. I will see you a little later.